Good evening, everybody, and welcome to another episode of Millionaire Mindset Mondays live. We're here every Monday night on Facebook at 6 p.m. EST. And I'm Jan Carmanico Reeves, your host, on a mission to make real estate investing fun, easy, and profitable. So tonight we have with us my good friends from a past retreat, uh, Marilyn and William Clark, and they're going to tell us about taking success to new heights. So welcome, my friends. So glad to have you here, and please just expand a little bit about yourselves and what taking success to new heights actually means.
Would you like to start, William?
Okay. Yeah. So taking success to new heights is being able to leverage other people's money and time and using that leverage to increase your own success because as investors, we all know it's tough to do things on your own. You run out of time, you run out of money, you run out of energy. So if you're able to tap into that untapped resource of other people's money and other people's time, you can push your success to higher and higher levels. You can start at one and you can go to 100, just like that. And that's what we're all about. We're all about. We're taking little success and we're pushing that success to higher and higher heights.
Okay, you want to expand on that, Marilyn?
Sure. I think too, for us, we really like helping other people along the process as well, through education, through just our own example of things, but also just being that partner that tries to continually give more than what they're getting back. And so I feel like that is, again, something that helps us grow by being sort of a leader in that way and allows us to see other people or see the untapped potential that other people might have and have them see it as well.
Good, good. Yeah, yeah. And it helps you look a little bit deeper into things as well. Very good. Very good.
Mhm.
So, tell us maybe a little bit about your backgrounds.
Uh, Myself, I've been working in oil and gas for the last 20 years in various locations within Alberta, and on the side, been doing real estate investing for the last 9 years, mostly single family for the last 6 years. And in the last 3 years, we made the shift over into multifamily, connected with the wonderful group of Wealth Genius and a couple of other groups along the way. Learned a lot, made a lot of partnerships, a lot of friendships, and just being that networking and resource for ourselves, and resource for other people as well. So it's been an enjoyable ride so far, and we just want to take it to the next level.
Nice.
Yeah, for myself, I've been a realtor in the Calgary area for the last 9 years as well. When I got my real estate license, within a couple months, I had taken a class on real estate investing, and that just completely opened up a whole new world for me, both as a realtor but as an investor as well. And yeah, so a lot of my business is working with investors and just helping to be an education source for people who are curious about real estate investing, not necessarily sure if it's for them, but being able to open their eyes and give them a little bit more information so that they understand it's not necessarily always tenants and toilets, that there are other ways of being an investor. So, yeah.
Absolutely. Yeah, absolutely. That yeah, passive investing and yeah, explaining. And what a wonderful asset for you to be working with real estate investors to know how to run numbers and know what to look for in a good asset. And that's yeah, that's huge to offer people.
Yes, yeah, it's definitely been a piece that for novice investors to be able to give them that education up front A few of people have completely changed their focus on how they want to approach investing based on our conversations. So I think that our experience and our education through groups like Wealth Genius has really assisted me be a better agent, but also a better investor's agent.
Absolutely. So,
Mhm.
do they decide to become a passive investor after you explain things to them?
Yes, some have decided that is the route to go.
Yeah.
I've actually had someone also go from single family home mindset to completely nixing that entirely and going, you know what? Multifamily. Why did I never think I could do multifamily? Because in their mind, they had to come up with a down payment by themselves. They didn't know about joint ventures. They didn't know about how to create partnerships. And so providing them that information really was like just completely mind changing for them. So, yeah,
Awesome. So you're giving them like a little mini multifamily boot camp with your consultation, right? That's awesome.
little bit.
Yeah. Yeah, and people don't know what they don't know, right? They don't know that they just think, "Oh, I have to buy a single family home and start there," and they really don't know how to scale, right? And as we've learned, it makes more sense to get into multifamily and bring, partners in, whether it's a group of people or because you just mitigate the risk, right? The bigger you go.
Absolutely.
Yeah. Yeah. Yeah, well, that's awesome. That although you probably talked them out of purchasing that single family home that they wanted to look at, right?
The fact that I'm not a commercial agent, I'm not able to do multifamily purchases for people, but I've got an amazing group of people that I can refer those clients to. So either way, we'll got you from the beginning right to the end.
Oh, that's wonderful. That's wonderful. So, tell us, the listeners, a little bit about you've been involved in several partnerships.
Yeah, yeah, yeah. We've been involved in probably about 4 or 5 joint venture partnerships over the years.
Uh-huh.
Two, yeah, we had 2 single family properties in British Columbia. And those properties were extremely successful because we had a good communication, a really strong agreement that stated what our part as passive partners was and what our active partners on the ground were doing and stuff like that. And we were constantly in contact. They were emailing us weekly during renovations and then monthly once the places were stabilized and tenanted, and that worked really well. They were always available for any questions or concerns. And if anything ever popped up, we could pop on a Zoom call or a telephone call with within hours with these partners. And those were 2 of our most successful partnerships.
Nice. So you went in as the passive investor on those
Yeah,
ones,
yeah,
and eh, you think the key to the success was having very clearly defined roles,
yeah,
right?
yeah. Absolutely. Our JV agreement was very specific. It said working partners will be property managers, boots on the ground. Passive partners are basically just handing over checks every once in a while, and they were more than willing as working partners
Yeah. Yeah.
to share learnings with us. That
Yeah.
was something that was one of our biggest takeaways was we learned a lot as passive partners,
Nice.
and we're able to turn that into a potential active/passive deal in one of our next partnerships as well. So
Nice, nice. And I think that's commonly advised to new investors to partner with somebody who's experienced, right? Be a money partner and learn as the deal goes along. Make that part of the agreement is that it's basically like education, right? That yeah, you get experience in your first deal, but you let the experienced people guide it so that you're not making mistakes, costly mistakes, right?
Yeah,
100%.
absolutely. Yeah, I think too with one of our JV agreements, we everything was really spelled out with a different partnership that than Will's talking about, but we weren't as on top of the communications that we wanted to be. We weren't as explicit with the roles, and so we did find some challenges with that. And once we started to work through those and address those, then things started running a little bit smoother. So your JV agreement, absolutely so important to have roles and responsibilities well laid out, but you've also got to be able to actually have some conversations and tough conversations when things are not being adhered to.
Yeah, absolutely. So, was that the first one or the second one, or were they around the same time?
Yeah, they were around the same time. And I think there was a lot of assumptions being made on both parties' parts versus really looking at the agreement and following that to the letter. So yeah. But like I said, yeah, having some conversations when issues started to arise really allowed us to nip those and get back on track.
Yeah, yeah, and I hear that so often from different people, right? Like really define those roles, really make it clear because things are going to come up. It's
Yep.
guaranteed things are going to come up, right? So
Yeah.
try to be proactive about situations that will arise and expectations, I think, for each other
Yeah.
Yes,
Uh,
absolutely.
is really yeah. So on the one that there was a little bit more of a challenge, were they new working partners as well, or was this one of their first joint venture agreements, maybe?
It was a brand new joint venture. I think this might have been either our first or our second as well. So we were both kind of newbies,
Okay.
which is again how we got into the position of needing to take the step back and figure things out a little bit clearer during the process.
Yeah, but that's wonderful that you were able to. Um, Unfortunately, it should have been taken care of ahead of time, but it's wonderful that you were both able to communicate and work it out. And I mean, learning lesson for them, learning lesson for you, and I'm sure it in the long run helped to create a lot more trust with them as partners. Just knowing that you could come to them and speak openly and vice versa.
Right. Yeah,
yeah.
absolutely. And it really has allowed us to, moving forward, know exactly what to avoid for the future. So that was a good learning lesson. And thank goodness there was no big issues or financial like ramifications. It was all just, really simple, easy kind of communication stuff. So yes, thank goodness, no big problems with it.
Yeah. Yeah. And when we sold that property, we ended up being friends with with our joint venture partners. So yeah, it worked out. It worked out on both ends. Both ends. We came out financially okay, and we came up with a really good friendship out of it. So we
Nice.
definitely have them on our list for potential stuff in the future. So
Nice. Very good. Very good. That's a happy ending. That's what we like to hear, right?
yeah,
Yeah, yeah, yeah. Because it's not always that you hear some stories that don't end so happily. But
yeah.
yeah. No. Um, how did you have a checklist when you were vetting your potential joint venture partners or
We sort of had a checklist, but we also just did a lot of discussions like this, just over Zoom or over the phone, just talking back and forth, getting an idea of their background and what their ideal position would be, and if they would be a fit for our goal at the time. So it was just a lot of back and forth.
right? And that's very important too, right? Like what are your investment goals and do they align with the project? Because just because it's a lucrative project, maybe the return of capital isn't when you want it, maybe there's
Yeah,
yeah, you really have to align on your investment goals.
yeah, and
Yeah.
And plus, we wanted to be on the same page as far as communication goes, because some people want weekly updates. Other people are happy with monthly or quarterly updates, but stuff like that. And that's something you have to really figure out at the start as well, is what's that perfect medium? So people are happy when it comes to information, because some passive investors just want the check.
Yep.
Other ones want to see a breakdown. So you want to get those guidelines set down almost at the start, kind of thing.
Absolutely. And I guess it depends too on the project, right? Like if there's major renovations going on, you want to know if they're on time, on budget, all those kind of things, right? Whereas if it's a buy and hold with just tenant turnovers or, very little maintenance issues, then there's really not a lot to report, right? But if there's a big active renovation going on and with a refinance coming fairly quickly, then it is important to keep up to date.
Yeah.
Yeah. Yeah. Some projects are just boring. They're just,
Yeah, yeah.
yeah.
Some of this like plug and play. You just start them up and they just
Yeah.
run by themselves.
Yeah.
Themselves, yeah.
Yeah. One of my investors says, and well, no, it's a 2-year refinance on this one, but he said, I don't, just let me know when it's refinance time. Like, I'll talk to you then. I don't need any information because,
Yeah,
I mean, really, he doesn't care about the day to day,
yeah,
and
yeah,
it's 2-year-old building, so it's not like any major capital expenditures or anything like that, right? So it's just, yeah,
yeah,
yeah. Let me know when I'm getting my money back.
yeah,
That's basically, yeah. So, yeah, but it's very important to have those conversations ahead of time and just make sure everybody's on the same page, communication style. Is it a Zoom call? Is it a phone call? Is it a newsletter? What kind of things do people like to see?
yeah.
Yeah, absolutely. So that was two. What else have you done?
We bought 3 years ago, right before I joined the Wealth Genius Group. We bought a 8 unit new build multifamily project,
Nice.
and let me tell you, that was a big learning curve for us,
Yeah.
especially for me, because I've never done commercial financing before, not of that stuff. Fortunately, I was able to hook up with a good realtor, a good mortgage broker, very understanding both of them to help walk through the process, and
Nice.
the same thing with the lawyer. We were able to hook up with a commercial lawyer who walked us through this process very step by step, and was very open to questions and very easy to understand, because you
Nice.
you yourself know, and everybody else in the commercial world knows, it could be a pile of papers a mile high.
Right, right. So that one you purchased yourself.
Yeah, we ended up
Oh,
purchasing ourselves. We,
yeah.
we kind of did things backwards on that one, which is another lesson we'd like to share with people, is have your investors lined up first. Because we had this deal under contract and we put it out to the universe. We got one investor and that was it. That was it. And we end up having to do the rest of it ourselves.
Yeah.
So,
Yeah. Yeah.
yeah. And it worked out in the end, because we were able to do a refinance 18 months after purchase, and we were able to get most of our capital back out. So it ended up working out for us. But again, we can't stress this enough. Have a pocket of investors ready to go before we
Yeah.
put anything under contract.
Right, right. Yeah, because it's too late. Once it's under contract, the time is ticking, right?
Yeah,
However, in that case, it worked out well for you because you own
yeah, yeah,
a good chunk of the equity in it and you got your
yeah,
capital back. So rinse and repeat, right?
yeah, exactly.
Yeah, yeah, so that's good. In that case too, part of maybe it's not quite a partnership, but your team, right? Your
Yeah,
mortgage broker, your realtor, your lawyer, like they are all very key components to
yeah,
making the deal go smoothly.
absolutely. Yeah.
Yeah,
Yeah. And those we all got through referrals through various investor networks. We just asked, well, who's a good realtor in this area? Who's a good mortgage broker who's done these kind of deals before? Who's a good lawyer who walks you through step by step. And that's how you vet your power team, is you ask those kind of questions, and you just make sure that their mindset matches yours. Because again, it's all about being on the same page. Because if you get a realtor who's not familiar with investing, you may not get the property that you want or the numbers that you want. They may not fight for you the way an investor focused realtor would, etc. So yeah.
Absolutely. Yeah, that makes total sense because yeah, realtors that are selling single family homes, they honestly have no idea about yeah, how multifamily works, right? And
Yeah.
yeah, and how the numbers work and writing love letters and why that makes sense.
Yeah. Yeah.
Right?
Yeah.
And yeah, yeah, absolutely. So, anything to add to that, Marilyn?
Yeah, no, just I think that definitely your power team also needs to constantly be updated. It's great to have the go-to people that you really trust, including your home inspectors and all of those groups of people. But it's good to keep other people in your sphere as well because someone might not be available, but then also you might think you've got this incredibly wonderful person, but until you've built up enough experience with doing things, you might not realize the person you're working with doesn't have the A+ skills. They might have A- skills. They're still good skills, but there might be somebody else out there as well that can provide a little extra value. So don't be afraid to keep vetting other people and looking around because it only benefits you to continually be looking for the best of the best.
Absolutely. Absolutely. And no offense to the other people, but you want the best on your team, right?
Yeah.
Yeah. Yeah, absolutely. Yeah. Um, So how did and again, I think part of that is your net worth. Your network is your net
Yeah.
worth, right? And
Yeah.
having access to be able to reach out to people, hey, in whatever city that you want to invest in, being able to put a post in our group and say, who knows a top-notch realtor, or a
Yeah.
top-notch lawyer in that area, a building inspector, all those kind of things. And that's, yeah, it's all about your network, right?
100%. Yeah.
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 And
So
yeah.
that,
Yeah. Yeah.
yeah. So that one's refinanced already.
Yeah.
Nice.
Yeah.
And tell us about that project. How were you able to refinance it so quickly?
It was a brand new build, so we were able at the time to use the MLI Select program before they did all these twerks and changes they've been doing over the last couple of years. So yeah, we managed to qualify as a new build to qualify for the program.
Oh, with efficiency?
Yeah, with
100 points? Oh,
affordability actually.
affordability. Okay.
Yeah,
Okay. Yeah.
and yeah, and under the affordability, not to get too technical, even though we're talking to majority of investors, under affordability with a new build, we only had to have 25% of the rent fall under the affordable CMHC guideline rent.
Right. Right.
Whereas with an existing building, you have to have 75 or 80%. I can't remember the exact number, but that helped us out. That helped us out a lot.
New
And
builds, yeah, different. And that one's in Edmonton?
Edmonton, yeah,
Yeah. So the numbers make sense in Edmonton, right? For the
yeah.
affordability because
Oh, yeah, yeah,
yeah,
absolutely. The affordability, and plus when we did the appraisal for the refinance, we actually refinanced higher than our purchase price in the
nice.
year in the year and a half that we had owned it. So yeah, the market at the time was definitely in our favor for that. So yeah,
Nice. So did you build it or you purchased?
just it through a builder.
Okay.
Yeah,
Okay. Okay. So you purchased it with a bridge loan or explain
yeah,
the
yeah,
process?
yeah, yeah, yeah.
Okay.
We did a conventional bridge loan for the first 18 months. And then we rolled that over into a CMHC because at the time when we bought, the backlog at CMHC was probably 6 or 8 months.
Yeah.
and we had to close in about 4 months. So
Okay.
we were kind of in a pickle. So we ended up doing a bridge loan for the
And
18 months,
yeah,
and then rolled that over for the refinance.
nice, nice. Once it was stabilized,
Yeah,
everything was rented, and
yeah.
yeah, yeah. So at that time, did you apply to CMHC initially? Did it take 18 months to?
No, no. Actually, what happened was we had the bridge loan, and then we did all the CMHC paperwork. We submitted that to CMHC, and within a week, we got a call back. Our broker our mortgage broker got a call back that said the file had been opened, and they said that was the fastest they had seen CMHC ever open a file.
Wow.
Yeah,
Wow.
yeah,
But it was still 18 months before before it actually refied. But yeah,
yeah,
yeah, yeah, you're fortunate that yeah, because they just changed or they're just changing the rules again. I think it was today, wasn't it? That um anything after today that the fees are going up.
yeah. The premiums are going up as of today. Yeah,
Yeah, yeah, yeah. So a lot of people were scrambling over the weekend to
yeah,
all their stuff in. Yeah. And that's the thing with um yeah, you have to have so many contingency plans in place because CDMHC is notorious for changing their rules with like almost no notice, right? So
right. Yeah,
yeah, yeah.
yeah,
So that's yeah, it's really important. Again, it's all about your network, right?
yeah,
And having people maybe give you a heads up. That I saw a couple of posts on over the weekend or late last week saying, that somebody from higher up had given them a heads up that the fees were going up. So hurry up and get your stuff in, and get your
yeah, yeah,
application in.
yeah,
And yeah, and that's all so important.
yeah, yeah.
Wow.
And that's the key. Having those A plus people on your team who have those network knowledge, who know people at CMHC, who know people at the banks and stuff like that, who are able to funnel that information down to you be- before it even hits the open market. So you're able to pivot because a lot of it over the last 5 years, as we all know, it's been pivot, pivot, pivot.
Yes, yes, and I think that's just real estate investing, right? Is
Yeah,
is nothing ever is a straight line. There's always
yeah,
it's a
yeah,
big zigzag, right? And
yeah,
it's how well you pivot, right? And
yeah.
how well you get back on track or or take a different path if that's what needs to be done. But
Mhm.
yeah, that's all about knowledge, expertise, experience, and network, right? Talking to other people who have been down that path and come up with great ideas, and you can lean on those ideas, right?
Yeah.
Yeah, absolutely. Yeah. Yeah, we actually got really lucky too. When we had the opportunity to do the mastermind in Greece back in October, and that's where we met you, lovely Jan, and a few other investors. So we've been in touch with them. We've actually, had after our mastermind an opportunity to really take that step back and think about, we had the 8 unit and we wanted to focus on multifamily moving forward. And so, yeah, that mastermind really allowed us to do some deeper thinking, do some strategic planning, and connecting more with other investors. And so we were able recently to get on board with one of the projects that Sean and Roz were doing in Owen Sound. And so we've become passive investors on that project as well now. And just so excited to see all of the work that's going to be put into this place. And I mean, the returns are going to be great, but the bigger picture is like that project is also going to be really helpful in the community. And so we're excited to see that that's going to yeah, just have a really positive impact in the area as well.
That's awesome. Yeah. And
Mhm.
that's like you mentioned, these retreats. I'm going on another one. Um, but you really build these relationships, right? Like, you can see when we get together at our conferences, there's little groups of, you know, like the family, right, from
Yeah.
each retreat. And yeah, you really did. And aside from that, going on these retreats really helps you to level up, right? It really helps you focus on what the next step should be in overcoming challenges. And
Yeah, yeah, yeah,
yeah, yeah. Like as you know, part of my mastermind was to open a property management company, and that was mostly, you know, due to the taxation aspect of it, right? Because it's active income versus passive income. But then within my network and having as a guest on here, um, Andre Deneme from Kingston. So he has a great property management company set up already. And so now I've partnered with him because why reinvent the wheel, right? So
yeah.
they're running it from Kingston, and I'm seeing messages as we're on the call coming in here about Windsor properties that we have under management now. So they're taking care of it, and so I can go on my on my podcast and talk to you guys while they're you know, managing. So yeah, it's about relationships, right? And building
Yeah,
relationships with other people. So
yeah,
and that's all part of like these masterminds, these conferences, and just really getting to know other people so that you know if you do align, right? If having
mm,
conversations and yeah,
yeah.
and learning from each other is the other
Oh, oh,
thing, right?
yeah. Oh, huge, huge, huge. I I have a page of stuff on my door back here, which is all the stuff I took from the mastermind. Just the little tidbits. And it's not so much the formal mastermind, it's just those one-on-one conversations that you have at these events, because you're out of your comfort zone, you're in a new area, whether it be United States, Mexico, Greece, Azores, or whatever. Yeah, you're in a different environment, so you're so laser, you can be so laser focused on things and be able to absorb it a lot better without the distractions of your phone or your email going off every 5 minutes.
Exactly, exactly. And it's just the collaborative mind, right?
Yeah,
Of all these people that you're with. And each one is different because it's different people. It's in a different area. And it's pretty amazing what a group of 20 people can come up with on each mastermind, right?
yeah,
Yeah, really good. And just making that tight connection too, and really like becoming like a small family, right? The Greek
yeah,
family, right? Yeah,
yeah,
right.
yeah,
And then yeah, what you know, wanting to cheer each other on when you're seeing that they're doing wins and accountability for people that right.
yeah,
Make sure that you follow through on yeah,
yeah,
things that you say. So
totally.
yeah,
I think,
that's
yeah, I was just going to say, I think too, one of the things I find most fascinating about real estate investors is that there is such a giving mindset, and you don't necessarily see that in a lot of industries. But when it comes to investors, there is such a mindset of what can I do to help you succeed? And that to me is just incredibly like generous of a mind, an incredibly generous mindset because we all benefit by seeing each other succeed, and there's always a sense of like pride in helping someone else, but also just seeing someone else do something really amazing. And yeah, I mean, investors tend to want to just assist each other do better, be better. And it could just be as simple as a, hey, have you read this book yet? It doesn't have to necessarily be a deal, but just mindset assistance and all of these other pieces that, you know, we sometimes need just a little shift in our focus and to hear about a good book recommendation or a great podcast, right? Something that just can change things up a little bit and create, you know, either an improved mindset, or even just, again, some new connections that people weren't aware existed.
Absolutely. And it really is about mindset, right? Real estate investing. So yeah, there's so many books like, when people talk about time and not having time. My favorite book of all times is Who Not How, right? That I recommend to everybody because it's another one that is it Buy Back Your Time? I haven't read that one yet.
Yeah, I think that's the name
Yeah.
of it. It
Yeah.
sounds very, very familiar.
Yeah,
Yeah.
because I mean that's a huge challenge, right, for people. Or yeah, just just in conversations and people come up with, a challenge that they're having and another investor and you should, try this app or try, like all and we really are very giving. I totally
Mm.
agree. And I
Yeah.
think it's all about creating that positive energy, right? And giving that,
Oh, yeah.
yeah.
Absolutely. Absolutely. Through the network, I've met a bunch of new investors, and just having that little bit of back and forth with a new investor, just sharing the insights, sharing that positive mindset, that growth mindset with somebody, and also just asking the right questions, because sometimes a new investor may not know how to ask the right questions. So if you can just go back and forth with them a little bit and say, I would ask, what do you want to know? And they ask a question, and I would say, oh, that's a good question, but how about you ask it this way? Just sort of that little tweak can can make a world difference when you're talking to a potential investor or a potential partner or a lender or something like that. It's just those little tidbits can be the greatest guidance to anyone. It could be a newbie investor. It could be somebody who's been doing it for 25 years. It's just those little tidbits are worth the weight in gold sometimes, and it doesn't take much.
No, it doesn't. Yeah, like you said, a few words changed up or yeah, no matter who you're talking to, right? That's
Yeah.
it's very important, very much so. Yeah. Yeah. And I'm guilty of talking to people who are not investors and it makes me crazy, when they um have money invested in a GIC or something like that. And I want to help the world. And like, no, that's making less than inflation. And don't
Yeah.
and it's so funny when people say, "Oh, but that's so risky." And I think, like, what about the stock market? What about, like,
Yeah.
I mean, look at real estate over time, and it's just, anyways, that's
Yeah.
I'm guilty, and then sometimes I have to zip my lips because
Yeah. 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 Yeah.
they don't, yeah, they just don't have the mindset for it, right?
Yeah.
Yeah,
Yeah.
yeah. But yeah, anyways, that's I get a little overexcited about that and want to share, right? Because I feel like we have this gift of knowledge about investing and how real estate investing is it's not get rich quick.
Yeah.
It's you know time in the market, not timing the market, but there's so many ways that you can leverage one thing to the next and
Yeah.
people just don't realize it. And I just want
Yeah.
to share that with everybody, with the world.
Yeah. Yeah. Yeah, exactly. It doesn't take seven figures to get something. You can start something with 1,000, just toss the number out there, $1,000. If you had
Yeah,
a free $1,000, you could leverage that into into a new property,
yeah,
realistically.
yeah, yeah. Well, I talk about my creative financing and the first property I bought, I
Yeah.
didn't have anything in the bank.
Yeah.
I used a line of credit, not even a HELOC, just an unsecured
Mm.
line of credit, got a private mortgage, and I used a 0% balance transfer card
Mm.
to for the deposit.
Yeah.
And here I am.
Yep.
Yeah, yeah. So you if you get creative, you don't have to have any money. Like it's
Yeah.
not illegal. It's
Yeah.
right. It's yeah, just figuring out how you can do it. Or go in as a working partner, which is a little trickier if you don't have the education. But anyways, that's a
Yeah.
whole Yeah,
It's a whole
yeah,
nother.
yeah. That's a whole other. Yeah, yeah, yeah. So, is that any other joint venture partnerships? Now you're in with Sean and Roz. That's great.
Yeah,
Yeah, and uh,
yeah. We just have the Sean and Ross. We have our Edmonton project with our one investor there, and that's pretty much it right now. So we're just looking to scale up. So as I said, we're putting our names out there, and we're just going to keep putting value in the world and attract value back to us.
absolutely, absolutely.
Mhm.
That's how the universe works, right?
Yeah,
Just put it out there, and yeah, yeah, and keep networking and keep looking at deals and find ones that numbers work and
yeah,
find partners that you align with to put the deals together.
yeah,
Absolutely. Yeah.
Mm.
Build that database.
Yeah, 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 absolutely.
Mm.
Just keep having those conversations.
Mhm.
Yeah.
yeah, yeah. And it's amazing sometimes the power of conversation because you could be talking to somebody you've known for 10 years or something like that, and then suddenly they start talking about real estate investing because they know that you're an investor. I had that happen to me at my 9 to 5 job the other day. So somebody I've been working with for almost 10 years came up to me and he said, "You're a real estate investor. What's your opinion on this, and this?" And I gave him a 30-second little thing. I didn't want to bore him with a bunch of statistics and stuff like that. I just gave him stuff in my head, stuff off the top of my head. And I felt really strong about it. And I didn't turn him off, and I didn't make myself sound like too much of an expert because again, it's a fine line between being an expert and being a loudmouth. So
Just right. Yeah. 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 I don't, yeah. I just, I get excited about it. And
yeah,
I
yeah,
want to share, you know what I mean? I don't,
yeah, yeah,
but yeah, sometimes I have to tone it down a little bit.
yeah,
Not that
yeah,
I'm trying to be a loudmouth
yeah, yeah,
or a show off. I
yeah,
get excited and I want them to get involved too because,
yeah,
you know, I want to help other people make money. But
yeah.
yeah, yeah, it's so true. So, any advice that you can give to the listeners about partnerships? I guess clear roles, expectations, anything?
Clear roles, expectations, and specific communication lines. Basically, what's it going to be? Is it going to be a Zoom call? Is it going to be a phone call? Is it going to be a newsletter? Is it just going to be a text or something like that? You just basically set those guidelines up from the start because everybody's different. Some people like to text all the time. Some people look at their email every day, kind of thing. So you,
Yeah,
you kind of have to decide what's the medium going to be, and then what's the frequency from there. Again, yeah, that'd be
yeah.
my.
And some people are all about numbers, right? They want to see spreadsheets. They want to
Yeah.
see, you know, activity. Um, Yeah, whereas other people just want to have a conversation and get a feel for because the numbers can change like in 5 minutes, right? And
Yeah.
yeah, right. And you have to pivot, but yeah,
Yeah.
yeah. So that's very important. Is just know what the expectations are. Um, yeah. And anything else, Marilyn? Any?
Just say, stay open to everything. I think, especially for Will and I in the beginning, we figured that single family homes was going to be the way that we go. We literally never gave multifamily even a second thought because we had no idea about it. We didn't understand it. And it was by getting involved with real estate investing groups and the education pieces from different groups as well. And then that networking. That is what changed our entire mindset. Also, things like some of the passive investing. There were certain pieces I had no idea were options to me until recently, and getting to know how other ways I could utilize like some registered funds. Again, Will had done it, he had talked about it. I just assumed it wasn't possible for me. And then again, the conversations in Greece and then the follow-up afterward made me realize, oh, I do have some funds sitting there from like 20 years ago that I've never looked at or touched. And okay, I guess that might be an option. And then starting to utilize those funds differently. So now that I'm aware of that differently, I've actually passed that along to a couple of clients and encouraged them to start looking at REITs and other opportunities that they themselves had no understanding of or no interest in because the money was sitting in GICs and they thought it was safe and everything was good there. So yeah, just again being
10 year.
yeah.
Yeah.
So yeah, just be open to like just hearing what other people are doing and how they're doing it because you just never know what's going to just tweak for you and completely turn everything you thought you knew on its head.
Well, and there's private REITs versus public REITs, right? And private
Mhm.
REITs are not sold at financial institutions, but private REITs are a lot more lucrative than.
Mhm.
So I guess what we're trying to share with people is reach out to an experienced, educated real estate investor because there's so many ways to make money passively that will pay you year over year over year over year and what we call no money left in the deal, like your deal, your 8 unit, you put the money in, refinanced it, got your money back, but you still own the building, right? And for your financial partner, they still own that equity portion of the building even though they got their money back. So the magic happens every 5 years when you do a refi and they keep getting money and then there's cash flow and there's mortgage pay down and like come talk to us about it because there's so many ways to make money and see how I get all
Yeah.
excited. Yeah.
Yeah.
Yeah, you don't have to buy the whole building. You don't have to deal with tenants and toilets. You don't even have to deal with refinancing on all that paperwork. The experienced real estate investors will do that for you.
Yeah.
Absolutely.
Yeah. Yeah. So anybody who doesn't know about multifamily, reach out to us because we
Yeah.
want to share our knowledge. It's it's so exciting. It really is.
It is because again, right? It's all about being able to ensure that people that are unfamiliar are even just being given a little bit of a light, something that just might spark an interest and allow them to start thinking differently for themselves and start thinking bigger versus, the same or even smaller.
Right. It's
Mhm.
really it's easier to get into multifamily and it's you're mitigating the risk, right? The bigger you go.
Mm.
So yeah, it's that light bulb moment, like when people go into boot camps and you think, is that legal? You know, right?
Yeah.
Right? Like that's crazy. You can do that, right? But it's just about getting started and
Mm.
then just rinse and repeat. And you just recycle that money into other projects, other projects, other
Mm.
projects. And meanwhile, the first ones are still growing and starting to produce income. So yes, I get so excited.
Yeah.
So we would love to have that conversation with anybody who wants to know more. Reach
Yeah.
out to Will or Marilyn or myself. Yeah, it's just a great investment.
Mm.
We truly believe, and it's not risky, right?
No. No.
And
Mm.
it's going to increase above inflation, whereas cash GICs, they're not keeping up. You're actually
Mm.
losing money on them.
Yeah.
Yeah. Yeah. But that's a whole other.
Yeah.
But yeah, I think we're all the same is we love to share our knowledge and what we've learned to help other people be able to make money through real estate
Yeah.
investing, whether
Absolutely.
it's yeah, registered funds, HELOCs, using your HELOC. You don't have to have a ton of money sitting in the bank, right? To get started. So,
Absolutely.
yeah. Okay. Anything else you want to get in? Last.
No, we covered a lot of ground and look forward to seeing everybody rise to the top.
Absolutely. Absolutely. Okay. Thank you for joining us tonight, guys. And we'll see you all next week.